Hey everyone, welcome back to Explain the Charts. Today is April 23rd, 2025, and we're diving into the S&P 500 SPY. We're going to cover the latest news and analyze the charts to understand what's driving the market. Recent headlines indicate that stock futures jumped after Trump softened his stance on Powell and hinted at scaling back tariffs on China. Also, Tesla missed on earnings, but expects cheaper EVs for 2025. Let's start by looking at the daily chart to get a broad overview. Looking at the one-day chart, we can see recent volatility. We've seen significant swings in price action, particularly in early April 2025. Prior to that, there's generally a bullish trend we can see in 2024. Let's zoom in on a specific range of the daily chart to examine these fluctuations more closely. Here, we can observe a sharp drop around April 3rd and 4th, followed by a significant rebound. This volatility likely corresponds to the news surrounding Trump's comments and evolving trade war sentiment. Now, let's examine the one-hour chart to get a more granular view of this recent price action. Switching to the one-hour chart, we can see more detail within that April range. The recovery after the initial drop is evident, potentially fueled by easing concerns over Fed independence and trade negotiations. Let's look at the most recent candles on the one-hour chart. Zooming in on the last few candles, we observe that after April 22nd, the market has been relatively calm with indecision and has gone sideways. To get a clearer picture of the intraday trading, let's switch to the 15-minute chart. On the 15-minute chart, the recent trading range is even clearer. We can see some intraday volatility, but nothing too extreme. This could be indicative of the market waiting for more definitive news or data before making a significant move. Looking at the very recent candles of April 22nd, we're starting to see another rally. The next thing to consider is levels of support and resistance, as well as what would cause a market reversal. On the daily chart, the 500 level will be looked at as key psychological support, while the all-time high of 614 may be a big level of resistance. A continued dovish stance from the Fed and further de-escalation in trade tensions could propel SPY towards that resistance, a 15% increase. The market is pricing in a relatively high likelihood of this as long as there are no big surprises, maybe a 60% chance. On the other hand, an escalation in trade wars or high inflation data would cause more bearish sentiment that will cause the market to test that support. This scenario has a 40% chance. Keep an eye on upcoming economic data releases and any further announcements from the Fed or regarding trade. This is Explain the Charts. Thanks for watching.